Good morning from Chicago traders. It's 8:01 a.m. Chicago time on the 22nd of June 2021. It is Tuesday. Episode number 2019. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, moving our attention over to the pre-market summary sheet by Convergent Trading. You can find Convergent Trading at convergenttrading.com. Of course, make sure you follow at twitter.com/conv trading, CONV trading. This morning, mild risk on sentiment overall as the market is consolidating right at yesterday's high in the S&P as well as the NASDAQ. Basically across the board, very, very sideways action in the overnight session. And we're seeing some indices falling back below the zero line. Russell down 7 points now, so it's mild risk on is where we were at 7:50 Central, 8:50 Eastern, but currently after this last move lower, we're really mixed or neutral in nature. We see the 10 years, the 30-year bond, and the Bund all down, but we're seeing the equity indices unchanged or slightly up with the Russell lagging. So a mixed bag this morning. The S&P has a balanced profile, 168,000 contracts traded. The overnight inventory currently sits at short 36% with 20.5 points of range, which is well within what we would consider normal, and that's where we are. So we held above settle in the S&P is 4213.75. Remember, settlements based on the VWAP of the last minute of trading in the cash, so in the equity index. So this is a price that is generated at 3 Central, 4 Eastern. We were well above it through most of the session, and now we're back to settlement and below yesterday's pit close in the S&P. Okay, so that's the rundown this morning. What's got the market's attention? We know that China is pushing out copper, zinc, and other metals from its reserves in large numbers to put a lid on the cost of manufacturing and pricing, and that's impacting, as you saw yesterday, copper. Today it's popping a little bit higher. Copper still just super strong. I mean, at 419.5. It is very, very strong. It's enjoyed a pretty massive rally over the last year or so. In terms of what's on deck for today in the calendar, consumer confidence, flash consumer confidence out of the EU. At 10, existing home sales in the U.S. at 10. Also, Fed's daily coming in at 11. And what's important is Fed Chair Powell. I believe the market's going to be paying attention to what Fed's Chair Powell is going to say to Congress today. I believe that they're going to be they're going to be questioning why the sudden turn in the Fed's stance, turning hawkish, but we'll see what that yields, what his answers are going to be. I think the market's going to be attentive. So at 2 o'clock Eastern, you may want to pay attention. After the close, we get API crude oil stocks at 4:30, and then we get the Bank of Japan monetary policy meeting minutes at 7:50 with manufacturing flash and services PMI flash out of Japan at 8:30, and that sets us off on what we are playing with today. So here's what was expected yesterday. Um, so here's what was expected yesterday. It's we were looking at a market yesterday that had pushed the low from Friday down, and we ended up with an impulse up that looked incomplete. And so the expectation yesterday is that we are likely to have a small pullback. Look for a small pullback opening in range, in value, on top of Friday's point of control, on top of yesterday's overnight point of control. So expect balance on the open, but was looking for it to take off. The key targets outlined are, 41.95 is the big one. Expected 41.85 to be taken out, and 41.95 is the big one. And then beyond there, 42.04. 42.04. The market went a lot farther than that, but as discussed yesterday, the overall expectation is for a market pushing higher from the open. The secondary scenario, push higher into the 41.85, fail to break through and get into Thursday's range, and then fall back through and then make it all the way back down to 41.45 again. Again, the primary scenario was in play. Here's what actually happened. So let's clean this chart up a little bit. The opening print at 41.73, we immediately put in an opening swing high of 41.77. So here's the responsive pull. So remember, this is what I talked about as being responsive. Let's go back. So here's this portion from 41.77 and a quarter down. That's that portion. So immediately responsive, go sideways, higher lows. This is the trigger. This is the trigger for looking for that long. Remember what I said yesterday. The key thing to look for on the open is that we open, we respond down, we push down, and then it has a hard time pushing through. We're looking for a higher low and looking for a breakout long into 41.95, which was up here, 41.95, right in here. That's the key target of the day, giving us about 20 points or so of range on that trade. So we ended up pushing all the way through to the next balance area. I'm gonna post an image that I put in the Convergent Trading chat room last night. Let's see if I can do this. Open a new tab. Here's an image that I posted yesterday just to show overall what has happened. Essentially, we moved down on Friday and we sat on top of a major balance point. Let me change the pen color. We sat on top, we moved down from what was a very prominent balance point up here, right? So we had a lot going on in that 42.14 to 42.1850 area. That was, you could see the micro composite point of control right here at 42.19, 42.18 half. That's the most traded price in that zone above, and we fell below it on Friday, gap down. And then on Friday, what we did is we completely went sideways on top of the most one of the most traded prices in the area. You can see there's a maroon line here. What that maroon line is saying is that's the point of control of this particular composite profile, the orange composite profile on the right. And so what we did is we traded right on top of this on Friday, and we sold off on the close. But what we did on yesterday is we opened again right on top of this area, and then we took off. And where did we go to? We went right to the 42.18.19 balance. So we moved from balance to balance. This is a very orderly auction, and I know some people probably tried to short the rally yesterday, looking for a continuation trade to the short side after Friday's sell-off. But this thing moved from balance to balance. It moved from a high volume node to a high volume node, and really made some great progress in doing so, telling us that the auction is quite orderly, and it participated in that way. So yesterday, as mentioned in the Head Trader channel, long only. That's all I'm looking for. There's nothing here that says to me that I should be short. We left the open behind us. We left Friday's range behind us. I mean, at the least, once it breaks above the prior day's RTH range, there's really no business selling the action. So, and that's where we stood. So we closed very strong. So we had a trend day profile. You could see there was really no consensus on value. We have a point of control that's at the upper end of the range, and we have a market that closed at the extreme. We closed basically almost completely on the high print. This is very bullish behavior. So the expectation is that overnight we would expect the market to continue higher, to at least push that high that we put in at 42.19. So let me double check that. Yeah, 42.19. So we expect this 42.19 to be taken out pretty quickly. And we did. We opened and then we immediately took out the 42.19, pulled back, didn't quite pull back to the point of control, and then we pushed to 42.26. And then since then, the European markets opened right in here. And since then, we have been actually pulling back. And so what do we have now? What are we looking at now? We're looking at the overnight point of control above us. This is important. The overnight point of control above us. We have VWAP and mid on top of each other. That's a description. That's a bit of a description of balance. And then we are trading around the prior day's point of control. And all of this is happening on top of this composite high volume node area. So today we're expecting, this is balance. It's skewed balance, but it is balance. So today, this is important. Today we're opening in an area that is likely to give us some chop. There's likely to be a fight here. This is important because we pushed into this yesterday's session, and we've tested the high overnight. I expect the 42.19 to get tested in the RTH session today, but overall we're opening in an area where we have volume from yesterday, we have volume on the composite from the last few weeks, and then we have volume from the overnight session, all in the same area. So there's a fair amount of resistance above, and we've run quite a ways, but there's support in this area, and that we know based on the volume right there on the composite that this is an area that the market actually liked, that it represents some sort of value. Otherwise, that volume would not be there. And so right now, the buyers have it. The buyers have the ball and are somewhat in control, but we're in an area where we have two-way play. So if today we chop around here and then squeeze higher, sellers are in serious trouble, and the high is likely to be taken out, the all-time high. If they hold it here, sellers have a chance, and if sellers have a chance, they are likely to squeeze back down to where we were on Friday, back to the 41.75. Remember, 41.75 represents the 41.85 area, which had a lot of volume between 41.80 and 85. There was a high volume node, which we're seeing here. So this brings us back into balance. So this would be the target on the short side if we break from here and a new all-time highs, because there's not much in terms of volume and acceptance up here, I'm expecting new all-time highs to take over if we push higher. So what does that mean? It means the market is trading at a point of inflection here. There's likely to be a fight. There's likely to be chop. What does that mean to you and me? If we're day traders, it means that it's likely to whipsaw. So this is the type of day where we might see 2,000 lots hitting the bid, and then the market dropping, and then immediately another 1,500 lot lifting the offer and sweeping up, and we're in between going, what the heck, this thing is just taking out my stops everywhere. So this is a good day to yesterday, as we left the trader bite, I talked about pushing the gas on the buy side. We're looking for it to break higher, high probability there. But today is one of these days where you need to see where the strength is. Is the strength from the buy side or is it from the sell side? And we'll know quite early. Again, above us, we have the prior high. We have the overnight point of control. We're at the mid VWAP, and we have yesterday's point of control beneath us. And all of this is resting on top of a high volume node. That's the context of today's trading. That's the narrative for today. And the narrative is what drives our individual trades. So given the conflict here, I can't tell you that, hey, I'm going to look for any support for a long bias or any support for a short bias. I can't tell you that until the market opens and we see what the market on open orders look like. So here's the composite. So we've had this engulfing week last week, and we've moved from, again, this balance, this point of control area yesterday. Look at it, opened right on top of it, to the next big area that was here, the 42.19 area, and we're holding. We've taken back more than 50% of last week's range from all-time highs of 48.50. This is a big threat to the shorts right now. This is not looking good. And I tweeted about it on Saturday or something. I said, the papers are like, oh my God, have we gone too far? Is this a bubble? Is this like the dot-com thing? Is the market selling off? And it's like, dude, we have not really accomplished anything with that sell-off. We gapped and sold off. We gapped, bounced, and then sold off at the end of the day on Friday. Calm down. This is where looking at the context and looking at what has happened around us helps us stay calm and recognize the action for what it is. Remember, trade what you see, not what you hear and what the mass psychology is, unless that's your trading plan. So the overnight session had weakish volume. The delta is negative. Let's move over and look at what's expected for today. There's not much to talk about in terms of the order flow right now, so I won't get into that. Okay, so here's what we have for today. Today, expecting, so it's currently it's trading at 42.16, settlements 42.1375. The close is 42.19, and so is the high print. So looking for an open auction, pretty choppy, stuck between this 42.12, 42.13 point of control from yesterday, settlement below us. I expect this to test settlement, and then I'm looking for it to push the 19 into the 26. I'm looking for the overnight high, the overnight stat to be filled through the overnight high, and I'm looking for it to start migrating towards that 42.33, 42.35 from last week before it consolidates and comes back in. So given the current information, I have to assume that the trend is up. The short-term trend is up. Secondary, open auction, same thing. An attempt higher fails. We get an impulse. So we're looking for which side does it impulse in. We get an impulse down. We push to 42.05. We do have a key area at 04. So we break the overnight low, And then we start working. And if we do break the overnight low, I'm looking for this thing to work itself back towards 41.75. Scenario 2 has the better opportunity, and it's likely to crush some people. So 75 below, 35 above are the key areas to monitor. But the most important thing you should take away from today's Trader Bite is we're opening in this heavy-ish volume area, as I talked about in this image right here. The fact that we are back in this bounce zone, and the next bounce zone is where we were yesterday. So this is why scenario 2 is looking for a return, and scenario 1 is looking for a grind up towards this 35 volume. Does that make sense? I'll let you go. Good luck, and I'll catch you tomorrow morning. Take care.